This content is for informational purposes only. You should not construe any such information or other material as legal, tax, investment, financial, or other advice. Nothing contained on here constitutes a solicitation, recommendation, endorsement, or offer by Draper Goren Holm or any third-party service provider to buy or sell any securities or other financial instruments whatsoever.
Hey everyone, it is me. We are here. Joseph is here too. Say hi, Joseph.
Hey, what's up?
Boom, boom, boom. We're recording.
Good morning, everyone.
Hey, everyone.
Hey everyone. Hey everyone.
Hey, everyone.
I am recording this on the computer now.
Hey everyone.
Hey, everyone.
Hey, everyone.
Hey everyone.
Boom. All right. It says it's recording. Boom, 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 boom. I am apparently recording.
The entire bottle of control. They're all exactly the same.
Crypto art, and then what it really is an NFT.
Wow.
Eddie wants to slap the bag.
So this is the next best thing.
DeFi is going to be a bubble.
It's provably scarce.
With Mad Dog.
Crypto, gold, and silver.
Transparent substance.
Take my money, start a war with it.
Without further ado.
Cheers to you, brother.
Get shit done.
Because the system has to collapse before that.
Cheers. I feel much better now.
Cheers.
Wow, that was heavy.
Boom. Welcome. Blockchain and Booze. Yeah. Blockchain and Booze number 148. Vince, I don't know if you know this, but we started it during the first quarantine, thinking it was going to be for a couple weeks, and we have not missed a week for 148 weeks straight, which is both incredible and sad at the same time.
Well, salute to you and Joseph and everybody else. That's well done. 148 running.
Yeah, I'm pretty proud of it. I think there's some ways to count it. You know, if you count it sideways a little bit, we did 2 the week of LA Blockchain Summit live, and there was a week when I was traveling, or a couple weeks when I was traveling for the last Security Token Summit, where I did a weird live one in New York at this cafe, and then we did a weird one at the Draper Network event in San Francisco. So there's probably some extras in the hopper in case we ever miss one. I'll use that as my excuse maybe. But before we fully dive in, I want to tell everyone, if you're watching on one of the streams on LinkedIn, on YouTube, on Twitter, wherever, if you go to blockchainbooze.io, it'll redirect you to the DGH events website. And you'll be able to hop into the chat there, chat with the community. When we're done, you'll be able to turn on your camera, hang out with community members. And that's super fun for us because we've literally got to meet so many of the people over the years. We've actually invested in companies we met at those stages. People have met each other and created companies that we later invested in backstage at these events. So it's really, really fun. So thank you for Lunar Crush as well for syndicating the stream on their things and for giving us love, because we love them. But this one, this is really funny. Actually, I have the old STS graphic here that I need to delete and upload the new one. But this episode is purposely put together because today we announced the next Security Token Summit, which here I just uploaded the graphic, June 20th. In New York City. I wanted Vince on today because Vince is an OG in our space. He knows the space really well, and he is the founder of FinTech TV, covering all the things going on in our space, not just security tokens, everything else as well on the New York Stock Exchange floor and everything. So he knows the traditional world, he knows this new world, and I wanted him on to talk about the industry, but first, before we jump in, welcome, Vince. Thanks for joining us.
Well, I'm delighted. Thank you for having me. And by the way, big shout out to Joe V and Luna Crush, because I am such a big fan, and just to always hear their name and seeing them pop up. So props to them, and thank you.
So we can fanboy for a moment. One, I'm totally conflicted. So everybody watching, I'm an investor in Lunar Crush, one of the first ones, maybe the first. I'm going to take the reins as being the first, although I think I'm not going to say that out loud. So I think I'm the first, but and I'm on the board. I think I'm the only non-founder on the board currently of Lunar Crush. So I'm totally conflicted, but they are, wow, I wish I had the stats in front of me. I could probably bring them up in a second, but to set down my drink. I think they surpassed 10 million page views last month. They're in the millions of unique active users monthly. And they added stocks recently, and their next update, which Joe told us about on Blockchain Boost, I'm not throwing anything out there that people don't know about. Their next update that's happening in the next week or two is just absolutely bonkers. I'm so excited for it because everyone knows I'm a big fan, but I need these tools because if I don't have the tools that they have, I end up having to call Vince. I end up having to call Joe and John from Lunar Crush and be like, what's going on with this thing? What is that piece of news? What actually is happening? But because Lunar Crush exists, Lunar Crush can be my wingman. And then I get to just, enjoy my hang sessions with them instead of drilling them about what's going on in the industry. But Vince, give everyone your background. What brought you into the space? We originally met in the crowdfunding world, right? So, yeah. So you're one of the folks who kind of migrated from that world into this new world along with us.
Yeah. Wow. So I don't want your head count on streaming to drop off too dramatically if I talk about my background. So we'll go really fast.
I start the stream off by playing a punk song from a friend's band, and the running joke when we were teenagers in bands was who could clear the room the fastest, because people would come and be like, ooh, a band's setting up, this is going to be neat, and then they'd start playing and everyone would go like, oh, and then they'd walk out. So I start the stream by deterring everyone. So if they stuck through that, they're going to love you, don't worry.
Oh, that was my pump up music, my pregame. I loved it.
Get us stoked.
Look, and it's funny, I've forgotten, as we think about the digital transformation and all the things that we talk about, going back pre-Jobs Act, and we're talking, 12 years ago, probably, when we first
Jobs
met.
Act was 2012, was signed in 2012, right? So, and then it took a couple years for it to happen, but we were talking about it, participating and at those same events together before that. So,
so I'm thinking it had to be 12 years, could be 15. Wow. So it's a great jumping off point. I really think, for me personally, I'm aging myself, 35 years licensed to capital markets technology, and 25 of that as an entrepreneur, and focusing a lot on technological innovation, changing some inefficiency in market infrastructure. And that led me through the migration of private company trading in the early days before it was, fashionable. Can you even trade a secondary transaction in an unregistered security?
I think most people didn't know that was possible. I didn't really know it was possible. And then I started meeting in that crowdfunding world, like when I was building technology and people were asking me to build products for them and stuff. And then I got to meet people like Greg Brogger from Shares Post, and back in the day, there was Second Market. And actually, I met Adam Draper. He was doing something called Expert Financial. And the whole point of all of those businesses were to help people sell their shares in private companies. And I think most people don't know, and most people are restricted from doing it if you just got the shares as an employee or something like that, or they think they are. People don't even know that you can do that. That's kind of the first interesting step. Is I think most startup people, right, don't know that, if you own shares in a private company, you may be able to actually sell them,
Well, it's a beautiful point, and I think it's, certainly unscripted, but a great point to bring forward. And, going back to Shares Post, Second Market, I had Gate Technologies at the time, right? And it was really those early innovations to say, you can look at an alternative instrument, and what the rules said, you could not trade that security on a nationally listed exchange for 12 months, right? Yeah. Didn't say that you couldn't transact in it privately in that in that prevailing period of time. So you began to realize that there was new ways to capture alpha earlier in the cycle, gosh, we were trading Facebook $2, $3, $4 billion in valuation, right?
So actually, that's funny. I was going to bring up Facebook because to me, that was the first one I heard a lot of. It was probably one of the biggest ones because one, it
worked.
Well, it was one of the biggest IPOs of a consumer product, right? Like, a lot of times we hear about an IPO, but it's not like, maybe you owned a Tesla car and Tesla goes public. So it's like, ooh, that's neat. But literally the most used website, the most used product on the internet used by billions of people goes public. There's billions of people who go, wait, Facebook's going public. And then there's people, over the years, thousands of employees, investors, people who have shares who go, wait, should I sell some of these before they go public? Is the price going to go down? Is the price going to go up? Or I need to buy a house and the only thing I have is these Tesla shares and they're not public yet. How do I sell them? And I remember hearing people doing it, but also going like, oh, it's a minimum $100,000 investment, right? Like that's just for accredited investors, and not just for accredited investors, but people who can write $100,000 check. That's not a lot of people. And so, yeah, people were, that was, I think that one of the first big ones I remember hearing people trying to buy and get into. I do remember also Coinbase stock being sold in various ways pre them going public as well.
Well, look, I think it was the realization, and again, I talk about it because I think it's a cycle. You're going to see muscle memory. It is the unknown, the uncertainty, what happens, education, awareness. Hey, you can invest in a private security earlier in the cycle, get valuation expansion, very much like a public growth once they do IPO, and begin to democratize that. So what we really saw is, a few $100 million in private securities issuance going to $3 trillion post Jobs Act, because you began to realize it is part of your investable portfolio and asset allocation, and getting earlier in the cycle. And as was
that stuff like enabled and helped by the Jobs Act, or did it just open people's eyes? Okay, that's interesting, because in my mind, most of startup fundraising post Jobs Act was kind of underwhelming, right? Like, I think that what we saw was people who weren't able to raise money in other ways resorting to crowdfunding. Not everyone. There were some there's a lot of really great examples, but a huge portion were like people who tried to raise money, couldn't raise money, went, oh, here's a way for me to raise free money, right? And then the deals were pretty bad, and it was pretty rough, especially when there was a $1 million limit for a majority of the time. And so I remember looking at that going, wow, that wasn't really great. But I guess I didn't really think about the category of the still for accredited investor crowdfunding part of it. Well, not crowdfunding, but public solicitation part of it that opened up.
I'm going to jump back and go forward, if I may, because I think it goes really to today, where we are in digital transformation. And that's what brought me into the space. So if you look at, this is not a Jobs Act session, but if you look at the titles of the Jobs Act, let's talk about crowdfunding for securities. Let's talk about Reg A Plus and increasing the limits. Let's talk about 12G and increasing shareholder limits from 500 to 2,000 shareholders. Let's talk about the removal of the ban on general solicitation, which really means you could solicit a security for sale, a la use social media as a distribution tool.
For those of you who don't know what that meant, is before 2012 and after for a little bit, because they didn't write the rules, but before then, if you posted on Facebook, on MySpace back then, I can show you guys some decks of my company where we were showing MySpace because it was bigger than Facebook at the time. If you posted on Facebook, my company is raising money, let me know if you're interested in investing, you're breaking the law. Like very breaking the law. It wasn't like whatever. It was like big time not okay and against the rules to do something like that. And it sounds insane and it sounds un-American, but you couldn't do that. And the Jobs Act said, okay, you can now do that. But if you do that, here's the things the hoops you have to jump through. And most of them, depending on the type of deal you want to do, weren't that hard when technology was finally built to address them.
So I would say, in fairness, part and parcel of education awareness, deals beginning to work in the private sector. You went from under $1 trillion in annual issuance of unregistered securities to over $3 trillion annually, right?
Wow.
And what that then happens is, hey, you have a demand for secondary liquidity needs, a la alternative trading systems entering the world of unregistered private securities. But where I think it becomes very significant, our good friend, Congressman Patrick McHenry, right? If you go back to Congressman McHenry's original Title III, crowdfunding for equity, he'll tell you the Pabst Blue Ribbon story. And why was that so important? People wanted to engage and buy into a company that they used, right? Talk about consumer facing, use and invest in what you believe in. And that got shut down. The consumers of Pabst Blue Ribbon were buying that beer company, and they got shut down by the SEC for unregistered security solicitation, right? But what it showed Congressman McHenry, the power of aggregation of individual investors into companies, job creation. So that went from 10 million to 5 million, settled on a million. So for me, when I first started to see blockchain in earnest, say what you will, good ICOs, bad ICOs, what ICOs demonstrated, right, was pent-up demand for investors to want to participate in different things. So 100%. It really became the technology that enabled the new day of how we aggregate. So, it kind of all harkens back a bit to me, pre-Jobs Act, Jobs Act, our relationship, all the advocacy, the crowdfunding professionals.
Really quickly, like a quick diversion, because there was a few iterations of the Jobs Act beforehand. And I remember specifically, I think it was one of, there was a few conferences that we would, like, everyone in the industry would see each other. There was one that was in like Orlando. There was one that was in San Diego a few times. And I think it was the San Diego one. I don't remember if it was like, what's his name? Doug Elinoff or something like that. Somebody was talking about, there's a new one about to be put out there. And it was before it was branded the Jobs Act. And I remember being, as much as I wanted this to happen, I was so cynical because I had seen my friends and people talk about how this is going to be put forth. And I kept going, there's no chance that the government is going to allow this. There's no chance they're going to open this up. And I kept saying that, even though I wanted it to happen. I was very negative about it. I think some of our friends were really pissed at me for being so negative about it. And then at one of those conferences, they said, they actually rebranded it to the Jumpstart Our Business Startups Act. It's called the Jobs Act. And this is right after the financial crisis, right? This is, that post 2008 world is probably 2011 or so when I was told this, and maybe, and I remember going, it's going to make it. And they were like, huh? And I was like, what politician right now can be on the record for voting against the Jobs Act?
The best branding exercise ever.
In one of our worst economies, or we're about to swing back up, unemployment is terrible. Everyone still has this, feeling of hurt. Do you know who was responsible for that rebrand of calling it the Jobs Act? Was it Patrick McHenry or one of those? Who wrote the actual thing? Was it,
Yeah, because it came out of committee awfully fast, and then got voted on and boom, done. I don't know who that was. We might have to give David Wield credit as being.
Yeah. You know what? David Wield, I think, wrote it. I don't know if he branded it. I will. I'm going to promise everyone, Vince, you can join again if you'd like. For everyone watching, there's a guy named David Wield who he's been at our events before. I don't remember if I've had him on Blockchain and Booze. He's spoken at a lot of our events. He was on the board of helping us create the first security token summit. Actually, like we asked his advice, and he connected with some of the speakers. He's known as sort of the godfather, the father of the
grandfather. Tell him I said it's the great grandfather now. Sorry,
you have to wait till he's on if you're going to give the digs.
This way it gets back to him back channel.
Yeah, I'll cut that and send it to him and say you need to come on and defend it. So we'll have him on. He was the vice chairman of NASDAQ, I think, at the time, and it was pretty interesting. I was supposed to meet him actually once, and something happened in the news, and he gave me some story that I thought was BS. He's like, I actually have to get off of the train early to do remote into some news segment or something. And I thought it was some weird excuse to not meet. And then I turned on the news, and he was on the news talking about this market thing that had just happened. And I was like, okay, that's a pretty big time move. Okay. Oh, there we go. Kim Wales is actually in the chat. We talked about Kim earlier. Hey, Kim. She said David was responsible for Title I and Title II of the Jobs Act. So those are the big ones. So we should have Kim. I would love
Kim
to
has
have
always
you
been
on.
the brain trust. Now we know how to go to.
We need to go. Yeah, Kim, I'm going to message you. Vince, if you'd like to come back, we'll get David on, we'll get Kim on, and we will, we'll jump through, we'll break down the Jobs Act. But let's go back to you. We're 20 minutes in. You know what? This is funny because
it's my fault.
No, I divert us every time. And actually a few weeks ago, we had Adam Draper on, and we were like 30 minutes in, and he's like, okay, so let me finish my introduction really quick. So it's clearly me. So let's jump back into that.
Oh, guys, so Jobs Act iteration, private company trading, wrote one of the early petitions to amend Reg ATS for private unregistered securities, built a couple of alternative trading systems, focused on private unregistered securities, got a bit of blockchain fever in 2015, 2016, and I'd say arguably late from a cryptography standpoint, but probably early from a licensed securities practitioner. So I think I was probably very much the outlier at that point. I wound up co-inventing 18 patents with 180 claims globally on trading, clear, and settlement and depository of a security instrument on chain. And I had a belief that blockchain DLT, although I wasn't the biggest fan of a lot of the ICOs, but there was some goodness happening in its demonstration of what is capable. Yeah. But I did not believe that blockchain broadly was going to, or cryptography, I should say, was going to burn down every piece of legacy infrastructure that we had in financial services, banking. I thought it was very much an evolution versus a revolution.
Yeah.
And
well, I think, and I think, we also struggled, right? Because when you talk to different people, they would talk about, we love DLTs, but not blockchain. And you're like, what's a DLT? Distributed ledger technology. And what's a blockchain? And you're like, and they try to explain the differences and this and that. And we kind of realized at one point, like, I think most people don't fully care. And what we want, right, is I always like throw up my hands. I'm like, there's the DeFi, like Wild West side of things. And maybe if we're all super lucky, at some point, we can actually have a completely decentralized, distributed, borderless world where all transactions can go through without intermediaries and all these things and all the things that we wish that we want and everything could happen. But then there's also the regulated side of the world. And if we use this technology on the regulated side of the world, all of the things we hate about regulation, all of the things that we might agree or disagree on, but no matter if you agree or disagree, it's cumbersome and it's not cheap and it's not easy to comply with. If we use technology to fix that, to digitize things, and you call a security digital instead of whatever it is currently, analog, then all of a sudden there's some interesting opportunities. There's a new market, and there's taking that $3 trillion category, and that's just one category of regulated assets, and you're streamlining that process and making it easier for people to participate. You make it easier for people to participate, more people can participate. It becomes cheaper, it becomes easier, it becomes more distributed. And we get the worst case scenario is banks have to compete. And then all of a sudden products are better for everyone. So I like the idea of let's just say it's digital. But I also think it's funny when people try to mince the categories. But that was a diversion from where you were getting. But I think that you're getting to where we're the evolution of, okay, we saw this technology working for ICOs. Why can't it work for the regulated side of
Well, I think, I wouldn't say it's a diversion. Where you went is really where I've made a large part of my career, right? Is, and again, harken back to Jobs Act and a technology go before that, right? If you look at every tradable asset certainly in the US, but probably globally, you started as phone brokered, you went to some level of hybrid, you went electronic, then you went high frequency algo, right? And as more people get educated and comfortable, the more volumes, the more efficiencies, more compression of margins, higher volumes. So if you take that script, it's rinse and repeat. So what you really, it's incumbent, I believe, different and advocated the Blockchain Commission for Sustainable Development and Blockchain for Impact with some friends and setting that up at UNGA, all about education and awareness of the technology within supply chain identity refugee camps. You talk about blockchain DLT, try going to Congress and say, wait, Bitcoin blockchain, right? 2015, 2017, right? So that education starts to create awareness. Then it's the technology utilization. So what we did around technology in the early days was say, this is just another technology creating visibility, efficiency, and you should embrace it, regulators, because it's creating transparency, particularly in private markets, unregistered, where you have less visibility, safety. And I tend to look at it as past, present, and future. The biggest challenge is the technology is so much more capable of what we're permitted to do. So you've got this friction, and you try to make it work in its current state by modernization of securities law. And eventually, hey, first entry point may be X, Y, and Z around a security. It just has a different wrapper in digital. And maybe we're going to get to that peer-to-peer standpoint and more efficiency when there's comfort and things are happening. So it's totally an evolutionary trail to me. And, that's kind of been the area where I tended to operate as a regulated person. The media side of things, which has been the growth in the past 3 years for me, has just been because I was a guy who was talking about this transformation in a new way and had a seat at the New York Stock Exchange to talk about it. And there was this juxtaposition of TradFi and some guy with some gray hair who's talking about blockchain and sustainability. Okay. So it's allowed us to create a bit of education across our shows globally. And
so tell everyone a little bit about FinTech TV, just like, the high level, because, the exposure I think the average person might have is watching, a clip on YouTube or on your website when one of the folks like us or Joe from Lunar Trust shares it on Twitter, right? We go, oh,
when Joe's on, everybody watches. So I'm sorry.
Well, that's right. When Joe's on, the world listens.
Who was that? E.F. Hutton, right? When E.F. Hutton talked. Oh, you're not even old enough to remember it. When E.F. Hutton talks, people listen, right? So I think it's when Joe talks, people listen. Anyway, it's a bad joke on you're too young. But so FinTech
usually
TV.
I'm the one. It feels good because usually I'm the one bringing up really weird old things to all the young folks in our industry, and them looking at me sideways because I bring up. I was discussing. I don't even know if it was on this or the last thing, and I said, when my dad bought us a group Hanukkah present. Which was a Pentium 60 Packard Bell computer. It was like that was like the life-changing moment for us. We had some computers before that, like the 386s or whatever, and all that, and logging into BBSs and explaining it to people, and they were just confused because the only time they've ever heard the word Pentium was maybe like in the Weird Al song, and that just saying Weird Al is probably dates me.
I did it right there.
So tell everyone about FinTech TV. I mean, I think it's a lot more than just obviously, someone doing interviews on New York Stock Exchange floor.
Yeah, no, very humbly, so fortunate of how it's grown. We have our home studio at the New York Stock Exchange on the floor. We're one of 4 alongside of CNBC and CNN, Cheddar and TD Ameritrade, so maybe that's 5. We broadcast live from there. We cover the digital asset report and the daily download, and that's really everything that most people on this would care about: digital transformation, stablecoin, crypto, anything within that framework. And then the Impact Show, which is everything That's ESG integration, climate change, the Sustainable Development Goals of the United Nations. Not accidentally, both big passions of mine and things that I like to talk about.
That shirt, that sweatshirt you're wearing is like the I forgot what logo it is, but it
yeah, well, hold on. Let me give it the Sustainable Development Goal wheel.
There we go. I knew it was. Zeev was explaining it to me one time too, because he always wears the pin. You got everyone watching. You might remember Zeev. He's the founder of Symmetria, another portfolio company of ours. Who he does some stuff with you on FinTech TV.
Absolutely, he was our first host in Tel Aviv and a dear friend. So you I guess you have to give your disclaimer that you're not independent, and I can.
Yeah, I mean, I have the disclaimer is at the beginning of the whole thing and in general, but I throw out the FYIs just because like I like being transparent. Like the worst is because I also have no apologies for shilling these things, because I'm in this world and I have an insane obsession of pretty much all of our portfolio companies. So I don't work with them unless I feel that way. And so it's like I have full pride and can, I can go and debate almost as well as some of the founding team members of some of these companies why they're the greatest on earth. So I feel it. You know what? It's interesting thing. We talk a lot about Onera, and Onera has been the title sponsor of Security Token Summit the last few times, and we're just there was the last conference that I went to pre-COVID. We did a trip to London, and then we were going to stop a couple places in Europe and end up in Israel so I could speak at FinTech Week in Tel Aviv with Zeev actually, and I spoke there with Zeev and the head of the Israeli Securities Authority, like the Israeli SEC, which is pretty cool that they were willing to just speak on a panel with a bunch of techies, which just kind of shows the difference. Some regulators in some places are compared to out here. But in London, this was right pre-COVID. People were just starting to talk about this virus, and it was a little bit of hysteria on the news. And this was the last month, probably right before it. And Ami got sick. Ami is the founder of Onera. On my way to like the opening reception for the conference, Ami calls me. He's like, "I'm sick. I don't think it's anything serious, but I'm not going to be the guy coughing at a conference right now. I'm supposed to give the keynote at the conference tomorrow and do a demo of our product and all this stuff. What do you think if you do it?" And I went back to the hotel room, stayed online with him for a couple hours, and I gave the demo on behalf of our company, and I gave the whole spiel in the speech. And then I did interviews afterwards with some of the media companies there as the representative for Onera, and it was pretty awesome. Like it was one of those moments where you're like, man, yeah, like I could do this. This is great. It was pretty awesome. We hosted a dinner afterwards, and I got to host the dinner also because Ami couldn't be there. It was pretty funny. It's really interesting. So I want to really quickly, before we jump in, I have some thoughts and some questions. I want to jump into FinTech TV a little more. Anyone on any of the streams, if you hop onto blockchainandbooze.io or blockchainbooze.io, it'll redirect you to the DGH events site. You can jump back there. I'm already seeing, Emilio and Coop, and we saw John was back there, and a bunch of community members are back there right now. Kim was back there earlier. If you have any questions for Vince or I about this category of, digital securities, security tokens, would love to go down that rabbit hole. Or FinTech TV and what Vince is working on right now. Let us know. Otherwise, I'm gonna go down my thoughts and couple things I wrote down. But before we go there, you're doing FinTech TV now. It's very cool to me. Like I love the juxtaposition of the New York Stock Exchange versus this new world, right? And I know you you talked about being a part of the, the regulated securities world and being a licensed, was it licensed broker dealer or licensed
alternative trading system, transfer agent?
So you've been a part of that world. You're part of this new world, and you get to interview kind of the people on both sides who are both either adopting or not adopting this for some reason, or people launching new things. Hey Ben, so I would love to you started talking about 2015-16. I remember 2017 when our conference was still called Crowd Invest Summit. There was a moment, there was 1 year, the last one that we did before we rebranded it to Crypto Invest Summit, where all of the media companies in attendance wanted to interview the lawyers, the securities attorneys. And I remember a few of the attorneys, guys who are early in that world, right? Like I mentioned Ellen off before, like the Mark Roderick, all these guys, Amy Wan, who was working in our space. Like I remember joking with all of them, going like, "This is amazing! For the first time ever, people want to hear what the securities attorney has to say, right?" So you've been a part, you've been through it, right? With alongside us, but you're watching it from a different perspective. How do you feel things are moving, right? Because we did the first security token summit over 4 years ago now. Now we're on the 5th one. 4 years ago, we thought we were on the cusp. It was going to happen any moment. Now we feel like it's on the cusp. It's going to happen any moment. Like it's happening, but it's funny. Back then, any of the single little deals that are happening today would have been marquee, the greatest, biggest, wildest thing in the industry. But I still feel like we're at the very, very beginning. It hasn't even fully started yet. So, do you think there's still ramp up time? Do you think we're at an inflection point? How does it feel, because you talk to both the traditional folks and when you talk to the innovators, the people, we always feel like it's just happening now, right? Like we're like, you wouldn't do it if you weren't this person that was like overly, confident, right?
Well, I'm going to say some of the same things I say, and it's kind of law of averages. Eventually I'll be right. But I agree with you. And there's, so many great, Rick Levine, some Dan Wolfs, go down the list of those early attorneys who are in there in the trenches thinking and advocating. So maybe we haven't seen the benefit of so much of that yet, but we're at that elongated cusp. And I started saying, I guess 4 years ago, people say, "Oh, we're in the early innings." I'm like, no, time out. We're still building the stadium, right? The game
still in our diapers
started, right? So I think we're kind of still there. We've gotten some bats, and again, I'm so proud, Stefan Debates from Elevated Returns. We did the St. Regis Aspen Resort and tokenized 20% of the equity in that stack 4.5 years ago.
Yeah.
Right. And I thought that was the watershed moment.
Yeah.
So, it is that, wow, we're almost there, but you're not there. So I think, regulation certainly around security tokens, digital assets that are securities, a challenge, and the adoption for that. I was probably wrong. I'll say that, where I thought private securities as equity was the first entry point. It's probably debt and yield instruments that are easier to understand, that lend themselves to earlier adoption. But I think, we're kind of at this really interesting time where we could talk about NFTs. NFTs, when NFTs may be deemed securities, when they are fractionalized and kind of change their DNA from being fungible to non-fungible, and what that may mean, and maybe little rinse and repeat coming all over again.
Or just utilizing the tool, right? Because an NFT itself is not a JPEG, right? An NFT itself is not, the same as a token, right? Like one ape coin is not the same actual piece of software. It's not the same thing as the contract that the ape is minted on, right? The JPEG. And those are two different things, and they can be used in different ways. And I think it's too one-dimensional to look at an NFT and go like, it's a picture, right? And you go like, no, it's a contract, and that contract has all sorts of attributes, and you can point at metadata that can hold other data and information in it, and you could store different things on chain. It could be keys to a vault. It could be the vault itself. It could be a membership card. It can be a certificate that gives you access to a share in a thing. And then now it's just a tool, right? Now it's a tool in your tool belt. And where is that going, right?
And I think that's the win, to be honest.
Yeah.
I think it is. Where is that tool that we're beginning to realize the utilization? What pain point is it going to solve? Greater acceptance sooner and faster than we ever imagined. And I think we're going to get there with security tokens and everything being digitized, tokenized, real world assets. Unfortunately, I think the environment of regulation by enforcement that we have
that was just brought up in the chat. I was going to say something to you. So how do you feel about it? Like, how do you feel what's going on?
Well, I won't be especially political. I would say
I probably will be.
I wrote my first petition on this issue in 2017 before Jay Clayton was confirmed. And I asked for clarity for the SEC on this little thing called the Howey test that we maybe remember, that we've heard a lot about. And and frankly, I called it regulation digital asset. And I'm told that was the first time digital asset was ever actually used.
Oh, that's cool. We should figure that out. If that's the case, you get to, it's just a feather in your cap, right?
Well, geez, I'll take a win anywhere I can. But, literally 24 petitions for rule change comment letters to CFTC, FINRA, SEC, 3 sets of congressional testimony later. I've lived this. And I was the first to think about using a transfer agent within chain. And yes, totally redundant, et cetera. But what it did was help the regulators understand stop and reissue instruments, to have an SEC registered primary record keeping for 12G. So, I've been living this trail so long, and it's very difficult when on one hand you have what could be a queue, and to all the unfortunate people going through it, you have the SEC saying if you're going to transact in a digital instrument that looks like a security, it has to be secondly traded on an ATS. Okay, let's embrace that. But yes, the pathway to an approval for an alternative trading system in the United States for a digital instrument currently is taking 2 years, edging towards 3 years. So you kind of have an inherent conflict
on top of the legal fees. It's like, on top of everything else, who can start a business and say, okay, wait 2 to 3 years to.
Let me see. Will you fund me while I hurry up and wait for 3 years for an approval before I can try to do my first transaction? So that's an inherent conflict and problem that we have to unclog. So if you're going to push down the pathway and say 90% of these instruments are indeed securities, and people are willing to say, okay, we're not going to argue with you, it's a security. Give me the regulatory tools. I'll build the technology on top of it. Let's get to go. So that's a real rub that I don't see lightning. And I'll say regulation by enforcement, and then regulation by comment letters, or regulation by registration statement.
The best, I found like the best path seemed to be the way people would send their the first one in the crowdfunding world was AngelList back in the day sent sent a letter to the SEC, and they got the no action letter. A no action letter, which it just seems insane. They don't commit to anything real. They just go like, if you do exactly what you just told me, we won't basically mess with you, is basically what they say, right? It still doesn't make sense. It's okay, it's legal. They don't say that. There'll be no action against you. What does that mean?
What it really means, okay, you're pretty safe, right, to go and do that, but just you,
we can
right?
Still change our mind.
So in most cases, right, that is incumbent to the individual organization who got the comment letter and had that done. It's not for the industry so much. It's not necessarily a safe harbor. So
that's true. And but a lot of people will go, okay, AngelList got a no action letter for this exact process, so we're probably safe doing it this way. Again, I would joke in the crowdfunding days, and now it's maybe even messier than it was back then. But I would joke, because I would tell our clients, you need to talk to your attorney about this. And then I would say, and they'd be like, well, you've already talked to the lawyers of like the 5 other sites you have live right now. Why don't we just do exactly what they do? And I go, because if you ask 5 different lawyers, you get 10 different answers. And every single one of our clients had a very different process based on how comfortable they were and what their lawyers told them to do and what jurisdiction they happened to be playing in, whether they're in Canada or the United States or wherever else in the world they might have been. And it wasn't even anything close to as exciting as what we're doing today. It was literally like just the investor verification checks and what information they might show publicly before you claim you're an accredited investor and all of these things. And every lawyer had a different feeling. We couldn't create a standard and just give it to people, which is what we wanted as a tech company, right? You want to be able to scale.
What's a material pre-existing relationship?
I don't know. You know, what's interesting is the biggest, most exciting evolution of our product about 10 years ago that we wanted to do was we wanted to launch a product that allowed broker dealers and institutions and bankers to share deals and to be able to track that if Vince made an introduction to the platform to Paul, every time Paul made an investment on the platform, as long as Vince is a licensed individual and has an agreement with us through his broker dealer, he could collect a commission for the investments that Paul makes on the site. It's pretty standard. It's totally legal. It's exactly what process happens today on paper, but people circumvent people and there's no way to track it and trace it. So we thought we'd build a platform to allow people to share deals and do things and engage in what a broker dealer would call a co-marketing agreement. Vince might be the guy who brought DGH's fund to this platform. And because he brought it, he is the banker that can get paid a commission, but he can do a deal with another banker to ask for an introduction and split the fees. Legally, there's paperwork. So we wanted to standardize that process and do this whole platform. And when we went to launch it, what we realized is nobody trusted us. There wasn't a single banker that would just introduce their whole Rolodex to us because a deal was there. They actually hated the idea of the deal being online because then it kind of forced them to trust people, and it didn't work. But if the blockchain existed, if Onera existed today, if companies like Vertalo existed back then, you'd be able to do those deals because you wouldn't actually have to trust the people. And you could verify that if I introduce Vince to you, I could watch Vince. I could see every transaction that Vince ever does. Maybe I won't see the details of every transaction for privacy reasons, but I'll see he transacted. And if it's on a deal that I'm a part of, I will get paid, right? And that is really cool. That only exists today. That didn't exist 10 years ago. And it enables so many interesting things. And I think what's interesting about it is there doesn't need to be new regulation for that to exist. All it is digitizing a process that exists. That's why I hate the idea that even a security, if it's digitized, is somehow different. Like there's existing rules and laws, and somehow if you abide exactly by them, but it's digital, it's now somehow different. It really doesn't make sense. That's something that Ziv did in Israel. He got the no action letter from the Israeli Securities Authority, basically saying, we're not going to treat a security on the blockchain differently than just regular security.
Well, I'll tell you, Rick Levine, who's been my securities attorney, I don't want to say my fellow warrior, have gone through that process time and time again. And there is no definition of a digital security anywhere in any securities law. And Rick, we said, okay, it is a security. We're going to treat it that way. It just has a different wrapper. If you can imagine, I was the first broker dealer, the first alternative trading system to go through an SEC and a FINRA audit as a digital broker dealer in ATS. And when they would come in and say, well, how are you doing custody? What do you mean, how are you doing custody? It's a private security. Oh, no, but I said, wait, time out. This is not DWAC eligible. This isn't DTCC. Go, that attorney down the road who's holding that spreadsheet in his drawer, is that custody? Is it that? So all of a sudden that became regulation by whatever methodology to say, we're treating this differently because it's digitized.
Yeah.
Well, please show me where that is in any case.
It's kind of crazy, right? Because if you would have asked me as an entrepreneur 10 years ago, when I did that company, I remember asking my lawyer if it was kosher for me to use, it wasn't DocuSign at the time. I think it was like Sign Now or something like that. Because I was like, it's so much easier for me to just collect digital signatures on our convertible note for my startup. And he's like, yeah, totally. And then a few of our investors were like, our lawyer said we can't sign digitally. Please send us the PDF and we'll print it.
Carrier pigeon and we'll get it right back to you.
You know, and I was fine with that. But what was funny is that I never printed anything. I don't even know if we had a printer in the office, right? I took everything digital. If they sent me a copy of it, I took a picture of it or scanned it or something. And I had copies of it in my email and in my Google Drive or wherever I had it. And what's interesting is if you would have asked me, is that a digital security? I would have said yes. I've never printed it out. I got the lawyers sent me the docs in email. I looked at it. I did it. Everything was signed digitally. The wires came in. I maybe got one check in the mail, but everything else was wired. And you know, it's so silly and weird. But what's funny is all of those deals that were done, right? My company is just one example of thousands of startups, right? We raised maybe a little over $1 million over the course of a couple of years and ultimately failed. There, as far as I know, you know, other than the company, you know, being incorporated and then kind of being dissolved and whatever later, I don't know if the government has any actual record of it. Like in terms of Vince didn't, I'm just example, Vince invests just $25,000 in this startup. There's no real record of that. Like you might have it in your own records, depending on who you are. If you're maybe a fund, you might file it a certain way. If you're an individual, you might write it off on your taxes later when we went out of business, you know. But like it's kind of interesting that that's the existing process, right? Like raising money on pieces of paper is the existing process. This is orders of magnitude better and more accountable, and somehow it's you know, hold your horses. We've got to make sure this is kosher. Like, what? Like it's insane. Like it is.
It's not like it's not happening all day long, right?
Yeah, and it's happening literally like in the worst possible way with no record, no real transactions of it. You know, but of course, if you do a Venmo transaction over a few $100, the IRS needs to know about it. Like these things like are just like there's no rhyme or reason. It's really bonkers. Hold on, I've got a question here. Design Heritage. I think that's Greg. Hey Greg, if that's you. Given the possible patterns, can you smart contract digital present day regulatory? Oh, so do you think that this tech, you know, with smart contracts, digital assets, all the combinations of it, do you think it's gonna make the regulatory world, you know, do you think it's going to change regulation over time and things are going to get better, or will they bend and get better, or do you think it's just they're just going to limit you know, limit us and send people overseas and get in the way?
Well, I think they already have, right? So I'll start there. I'm an eternal optimist, and maybe that's why I'm an entrepreneur. I think it gets better. I think recent events certainly don't help. I think we're getting to a better understanding of the industry, both legislatively, regulatory wise, and I think you have everybody jumping back. Right, we've seen a little bit of the shadow coming out. So, but I do think we get better. I do think there's this evolution that does take place. But I don't think it's not tomorrow and it's not next month.
I think I agree with you. It's like there is, you know, this 2 steps forward, 1 step back kind of thing. I joked earlier, but I seriously did not believe the Jobs Act would happen. You know, like a version of it would happen, because I just, you know, maybe I was just burned and I was like so angry at that world, because what I wanted to build as a company was just like pulled out from under me, right? Because of what I felt was insane old school regulation. And the Jobs Act did happen. And I might have looked at it also in one singular way of, startups raising money from a small place. And it's happening in some ways. It's not happening in other ways. But like you said, the private market of securities went from 1 trillion to 3 trillion, on the back of that. And it did some amazing things for our industry, and things will change. And I think that this BS, enforcement, what's it called in hindsight? The regulation by
enforcement.
But it's BS, and it's not okay, and it has to change in some way. But at the end of the day, I think that whether the politicians do it right, which I don't think nobody who is on either side of the aisle, and I think most people are. I think the idea of either side of the aisle is BS to 90% of people anyway. But people on either side of the aisle don't trust any of the politicians and to do it right. But here's where I think it works. Like we kind of mentioned this earlier, is that if we continue to build products, if the DeFi world continues to do what it does, if enough of the companies we work with and the large financial institutions have to go to other countries to participate, or the startups go to other countries, at a certain point, there's going to be financial products that everyone wants to participate in that are completely removed from the current system, and the current system will have to compete. And what I have extreme confidence in is when Goldman Sachs or JP Morgan or any of the largest banks in the world decide they want to participate in this space, the regulation will adjust to allow them to do what they need to do.
Funny how that happens sometimes, huh?
It's just how it is.
Hey, wait a second. I heard there might be a conference coming up that we want to talk
Yes.
about.
So speaking of it, I was going to share it here. Let's really share my screen. So it's Security Token Summit happening June 20th. We'll probably have some kind of cocktail party hangout session the evening before, and then that's an all-day event. And I'll show you guys pictures in 1 second from last year. We're doing it in New York now. We started in LA, thinking, this could be a fun one-day thing before LA Blockchain Summit. It worked out really well, but then COVID hit, and we did two virtual ones, and they were great. And when we came back, we thought, you know what? This would be a great event to do in New York, because we want to do an event in New York. And what we learned is that the folks who we wanted to participate, a lot of the regulators, were based on the East Coast. And even if we tried to offer buying them a ticket to come to the event, they can't accept that as a regulator. They can't, it would be considered a bribe or something like that. So they would try to plan coming to our event based on their travels to the LA office or things like that. And it never worked out. We never got the regulators to show up in person here. So we thought, you know what, let's do it in New York, this financial hub of the United States for sure. And we thought it would be great. And our friends like Vince came and covered it, and it was a really great event. And you guys know how I feel about politicians and things like that, but friend of Blockchain and Booze, Tom Emmer, who's been on here a few times. We get into spirited debates and have a great time together. He came in person. We had the mayor of New York come. We had a lot of the largest financial institutions come and participate, if not on stage in the audience, because some of them couldn't get clearance to be up on stage to talk about it, but they still participate in the event. And so it's a really great event. And it's a little bit different from the LA Blockchain Summit world, because we purposely, make it more intimate, right? We cap the attendance at about 500 people, and it's I agree, Ben. Everyone's now talking trash about politicians. But I'm gonna divert us. This is my Google Photos. I searched Vince right before we came live, and I just want to show everyone the event. Right, this was a great panel actually that Vince moderated. Andrew Au, and then we had Matt Cross, and I forgot his name from Skybridge. Off the top of my head, what is his name? Is it Daniel? Dan from Skybridge. And it was an incredible event. But the reason why I showed this, that's pretty funny. I'm somehow laughing while you're talking. That's a great picture right there.
What's unusual about that?
I'm making a face. And as you can see, it was awesome. FinTech TV came and actually interviewed a ton of the folks at the
I think I had a personal best. I think we did 23 or 24 interviews.
Oh my God, you are a beast. Yeah, in one day he powered through all these interviews, and you can see them on FinTech TV, by the way. And this is pretty cool because this is our Google Photos account. This is Vince participating at Crypto Invest Summit 2018. And there you go. You're wearing that pin.
There you go. Zeev and I were digital twins.
Sustainability. I love it. So, Security Token Summit is an amazing event. If you are in that world, I think it's a great, important one to go to. It's not, like I said, it's not LA Blockchain Summit. It's not speed dating with thousands of people coming in and just exchanging cards and whatever. It's a little bit deeper. It's a little bit more institutional focused. And I think, I feel like this last one, we're really a turning point in terms of the participation from kind of major banks who are getting into our space. And I think, I think there's a moment here. I think we are, as much as I want to discount it because I want to say what I said, 5 years ago, I felt we were at that inflection point. I think seeing behind the scenes of what's happening with the distribution of these assets and the various players, the existing players in the world actually tapping into the networks and willing to work together for distribution, the way you trade the New York Stock Exchange stock, right? I don't need an account at the New York Stock Exchange, my Schwab account or my Fidelity account or my Robinhood account or whatever service I use taps in using the technology. I don't know what APIs they use. I don't care what APIs they use. I don't care which service provider they use. They use one of a few that provides those rails. And those rails are being built in our industry now. And you're seeing the banks tap into them. And that's exciting to me because I want to know if I buy a share of FinTech TV, this is not, they may or may not, be distributing their shares or whatever. But if I don't have to create an account on a specific place, the first iteration, right? And we got to wrap this up actually in a minute. We're already over time, but the first iteration of our space, what we were talking about 5 years ago when people were launching, blockchains for ownership, that, Onera kind of did that, right? And then there was people building on Ethereum and people like, what was it? Poly, remember,
no.
Polymath and all the rest were building their own blockchains or doing these things. And we went, wow, this is really exciting. This is going to be the moment. But what we realized, thanks, Eric. What we realized was that they built those and they created their own silos. And they did the opposite of what we want a digital security to do. They made it harder to interact with because to interact with it, I needed an Ethereum wallet. I needed to sign up on this new place. I need to go to T0 or one of the other ones and sign up and create a brand new account to participate. And that's not how you transact normally, right? Like I don't have to create a new bank account to buy something when I want to buy a new thing that I haven't bought before. I use my existing bank account, right? Or if I want to buy a stock, again, I do it through my Schwab account, or my Fidelity account, or my Robinhood account. You don't do it. And those interoperability rails are what are being built today. And the banks are understanding that they can't also have all of their assets in one place because then they're now pigeonholing themselves and making it harder to transact than the piece of paper. The piece of paper, there's already this cumbersome, crazy process, but at least it exists. And I think that's why I'm excited, because I saw those people at the last event last May, and now in June, we're going to see them. And I know what's happening behind the scenes with just some of their partners. And I'm sure that what I'm seeing is just one portion, right? I see it through the lens of our portfolio and my friends and the companies that I know. There has to be 10 times more of that happening behind the scenes with every other bank in the world too. And I'm really pumped and excited for it. You joke that we haven't even started the game yet. I had this post about the security token space. I was trying to be funny, and I put in one of my kids' ultrasounds in like as the picture in the thing. And I said, it's not that we're in, and I joke we're in diapers. I said, we haven't even been born yet. Like this was a couple years ago or a few years ago, but I really feel like something's happening now. That's my.
Oh, I'm sorry. I apologize.
No, go. I was just gonna say that's my soapbox moment for the pumping everyone up tonight about this category. But
no, well, look, I just wanted to close out and really a true testimony to DGH, because I will tell you the success and what I saw at STS last year, and frankly why I did 20 some odd interviews and certainly could have done more, is just about everybody in that audience could have been on stage. They could have been keynote. You had the authenticity of the TradFi, the DeFi side, all in the same room, and the energy and the collaboration and the desire to engage with one another was one of the best signals that I saw. And I think that's a testimony to all of you individually and collectively at DGH. And it harkens back again. We sit there and we throw out Doug Elinoff, Rick Levine, Zeev, Kim, right? These are people that were either competitors, but were collaborating to help create an industry. And we're still friends today. Yeah. It's the same thing that's happening today. And I think on a bigger scale, no pun intended, on a global stage. Yeah. So I think it is a moment in time. And thank you.
And FinTech TV will be there. We're working on some fun stuff to have Vince back. I think hopefully we can do it in a way where you're not like doing like a million back-to-back interviews, where we can do some fun stuff where we're talking about collaborations. If, by the way, throwing it out there, if you are somebody who wants to partner on the event now, there's Miss Teen Crypto. Miss Teen Crypto was at the summit. She was doing interviews. It was great. Like that.
I got to interview her as well.
Oh, and yeah. So, hey, and we still got Greg here. That's one of our portfolio companies, but he's using. Maybe I shouldn't have said his name since he's using a pseudonym. But hey, I'm doxing everyone. But that was kind of fun for us. We purposely wanted Miss Teen Crypto to come. She talks about Bitcoin and Litecoin and everything else, and we're like, let's have her interview the old school institutional folks and see kind of what fun interviews. And she's a pro, and it was amazing. So we're going to have to definitely have her back. There's just so much fun, but like where I was getting at is, here's the shill moment. We do these events, but our reason for doing them is not why people normally do events. We're not a media company, right? And we don't make a lot of money from our events. We do, our events are there to grow the industry, build a community around us, and find the best companies in the world to invest in. But they cost a lot of money, and we have team members who spend full time working on these events. So if you are somebody who wants to partner and discuss it, we're going to put something together with FinTech TV so that you can support FinTech TV and get your name out there. And that's as much as I'll give on that, but we'll come up with some creative stuff. And the main thing is to make sure that the production around FinTech TV is bigger and cooler than last time, because we want to do some really fun stuff. Yeah, here we go. Everyone can know Design Heretic is Greg from Rivet. By the way, Rivet, not exactly in security token space, but anybody who's building on Ethereum or on an EVM needs Rivet for infrastructure. So it could be security token, it could be full degen DeFi side of the equation. By the way, if you're one of the people who used Infura back, recently, and you were very unhappy with the privacy stuff between MetaMask and Infura and all that, hit me up if you haven't seen my Twitter threads on how to switch your RPC in MetaMask so that you upgrade your MetaMask basically, so you have a private, better, faster way of transacting using Rivet's free tier. So it doesn't cost you anything. It's cool. Ben, no, it's not Flashbox. Flashbox is pretty cool, but this is using Rivet's API. It's rivet.cloud. Check that out. But I'll thanks, Greg, for helping us all have a better Are you guys interested in buying CoinDesk? That was a funny, interesting question. I heard CoinDesk's for sale. Vince, you got a couple $100 million in your back pocket?
Well,
that's the rumor. I don't know how much. I should throw out there. I have no idea.
I did hear it was 200 to 300 was the softly published number.
Dang. All right. Well, but Vince, I want to thank you for participating. I know this is always a fun and wild conversation on Blockchain Booze, not as disciplined and regimented as being on FinTech TV. And
I'm not sure I answered anything for you, but
I think we had fun, and I think that everyone should check out FinTech TV, because at the end of the day, like I showed, that was one example of one time you did a bunch of interviews in that span of time, but you're constantly doing shows from the New York Stock Exchange floor.
4 hours live out of the New York Stock Exchange, London coming online, Abu Dhabi studio. We're expanding Israel. It's a 24/7 live grid, fintech.tv. Always love to talk to great, new, exciting people around the world, changing finance, changing the way we live. So I'm sorry, I was shilling there. So
I like it. Go.
Yeah, no, all good, my friend.
Sounds good. No, Vince, thanks again for joining us. Everybody else, when we sign off, you'll be able to turn on your camera, hang out. I'm going to try to say hi before I run off for dinner with the family. Thanks again. We'll see you at Security Token Summit. We'll talk about it a lot more between now and June. And Vince, thanks again for your time. Where can people follow you other than FinTech TV? Is there a specific place you want people to follow you?
That's the easiest spot. LinkedIn, Twitter, we're around. I'm around. Easy to find. Vince at FinTech TV is my email for anybody who's older school like me, who's still on email. Vince at fintech.tv.
I love it. I'm a big fan of people who will throw out their email publicly like that. I think it's really weird when people are really weird and secretive about their email address, because at the end of the day, it should be your number one spot to communicate with people. I don't know. I love it. All right. Thanks, Vince. Thanks, everyone. We'll see you on the other side.